excluded, the unbanked person for whom all the financial inclusion is about, will really use that service. So technology can be an enabler, but the last mile has to be through a person. As long as there is cash, as long as the person is going to take cash out, make deposits, use that cash for buying services, goods, there has to be a person who has to deliver it to the end user. So quickly going through what we see as the status of the agent network in India. There are, as Mr. Sinha just mentioned, there are close to 200,000 agents, over 180 million accounts have been opened. But you know, a typical journey of an agent, as we see it, when the new agents are recruited, you know, they have a lot of excitement. They believe that they will be associated with banks. It's a very good employment opportunity for them. As they graduate from that initial excitement, they find that there is very limited training. They are not really getting any support from both their employers as well as the banking institutions and others. When they interact with the clients, they find that there is limited opportunity in terms of actual transactions. So in 6 to 8 months, 9 months time, there is huge amount of disillusionment, disappointment, and churn happens. So we find that a very large number of agents actually disappear in less than 1 year. So what is wrong with the BC model, the way we have adopted it? Is it something in the model that is wrong, or is it the way it has been implemented that needs some correction? So our view is there are few fundamental things that need to happen. So one of them is that there has to be a strong focus on 1 or 2 anchor products, and these could vary. These could vary by geography, by the type of segment, by the type of the need of the end user. But there has to be a strong anchor product, and NFA or BSBD accounts, as they have been now, you know, it's more of semantics, because in reality the NFAs have not really got converted into the basic savings accounts, which are supposed to have a lot more features, interoperability, having an ATM card so that the end users could actually, you know, go to a branch and transact. If they had an ATM nearby, they could use that. So the limitations that the NFAs had, they continue to be there. So this 1 or 2 anchor products have to be beyond just an NFA account. And experiences, many geography, they tell us that, you know, this is working. So of course remittance is one which has worked in many geographies. People talk about the experiences in Kenya, Safaricom, M-Pesa, and also there are many banks there who are now doing very good services, providing very good services through agency banking. There is at least one bank where the transactions through agency banking are now actually exceeding the transactions that happen in their branches. So, you know, their branch network may not be as vast and big as typically the large banks in India have, but with their about 8,000 agent points, they are already doing transactions more than that happen in a branch. So there is significant adoption. Those agents are today surviving. They are doing good business. Many of them are actually having in that business full time. So it's their primary business. There are other examples, again from remittance. And in India, again, remittance is something State Bank has done a great job there. We find a very large number of agents who are exclusively doing remittance business, whether it is on the sender side or on the destination side. They are quite viable, and they are doing this as a full-time business. A few other experiences which we have not seen scale up, they have been almost been at a pilot stage, or they have been experimented in a few geographies or few regions or few branches of certain banks where the BC and the BF model has been integrated. So the BC has not been left to earn only through purely financial inclusion activities, which are of course limited, and maybe a little a fixed income to supplement that. But they have also been allowed to do BF activities. And in that space, while there are different opinions whether credit linkage should happen through the BC channel or not, but certainly where they are involved in low risk activities such as lead generation or some involvement in recoveries, etc., and they are getting then paid some percentage basis their own efforts, we find them, they are doing quite well. So our view is that on an average where from a pure FI business, agents are getting maybe 1,000-1,200 rupees a month. When BC and BF integration happens, in many cases they are earning almost 5 times. So, on an average they could be earning 5,000 to 6,000. Many of them, if you can see on the left hand side, there are many who are doing actually far more than that. So they are really, they have really made it into an excellent business opportunity for themselves. So eventually we see that unless the agents are provided a basket of products and services, and these cannot be top driven, they cannot be that this is the set of services. So for example, Flexi RD, Flexi FD, that kind of product is often talked about. But then every geography will have a different need, each segment would need a different variant of that product. So that has to be understood in what the local requirements are, and this product basket has to be actually tailored to that. The whole process of agent selection, onboarding, training, the kind of support they need. So, this is from a survey that we did with the CGAP World Bank, and as you see, a vast majority of the CSPs are treating out of the system in 6 to 12 months or a little more. Less than 10% of them, they said that they ever received training, and most have never been visited by anybody. So from the visits or the monitoring by a bank official is sometimes not there, or maybe once in 6 months, once in a year. Even their own organizational staff in terms of monitoring or support is much less periodic. And of course, from a commission standpoint, so even in case of DBT payments, we did some analysis, and at the 2%, which is the best case scenario today in case of Andhra, we find in a few models that we studied that while the banks are bleeding, the BCs are actually making their ends meet. They are actually having a reasonable amount of profit. What they are not doing is passing on adequate amount of money to the CSPs. So essentially the CSPs and the banks are bleeding in the process. And if this were to be raised to the 3% that has been on discussion, which is something that has been recommended by the committee headed by Mr. Nandan Nilekani, and the BC are forced to pay a larger share to the CSPs, this could become much more equitable. So what we find is that today, even in a G2P scenario, a lot of the CSPs are getting as little as 2 to 500, and on an average maybe around 1,400 rupees. Whereas if we were to benchmark it against what is paid under NREGA itself, taking maybe a 150 rupee average across states and 20 days of work, so even that comes to more than 3,000 rupees. So the CSPs are getting less than what is paid under the minimum wages under NREGA. Another challenge that the CSPs face is in terms of liquidity management. This, as the challenge here is that this increases as the volume of business rises. So in case of pure FIBCs, it's not so much of a challenge today, but those who are into EBT, DBT, they are managing lakhs of rupees of cash which travels hundreds of kilometers every day. There is huge amount of risk that is involved, apart from the fact that there is additional cost to all who manage that and the risk associated. And additionally, the CSPs do not really get adequate support. Sometimes they have to actually either take their own insurance, or the BCs are required to take insurance cover for themselves and their staff. So summarizing, what we view is 4 or 5 things that need to be done. One is the way the FI villages and the EBT, DBT villages were assigned. They have gone on 2 separate tracks. So there is an acute need to rationalize those and make sure that 2 adjoining villages are not with 2 different banks, and therefore there is no motivation for either of them to really to invest and to really make a business case for themselves. A minimum that needs to be paid in case of G2P payments, and this is as long as the CSPs are required to have this as a sole business. So additionally, when we see other players who are coming in and who are using existing entities, so a Kirana store or somebody who is having existing livelihood and is not going to be dependent on just financial inclusion activities, that mix could really support them, because then they will not be dependent on just this income. We heard a very good comment in the morning that the need for full withdrawals is going to go away, but in reality, on ground, it still stays. So for all DBT payments or EBT payments, the entire amount that is paid out is fully withdrawn. And a lot of the beneficiaries feel that they should do it. If they leave money back, it could be perceived that they don't need it. So there is that lack of understanding and lack of awareness, and also this fear that they actually leave behind this money in whatever that instrument is. That many of them, they actually don't understand that it is a bank account, and whatever that instrument is, they don't want to leave behind money with the fear that if there are rising balances in that, it could be perceived that they are now above poverty line, or they don't really are eligible for those privileges. The 30-kilometer rule, again, for many banks, it is a constraint because many who really want to have a centralized way of operating and want to have a different, more innovative model in this space get limited by the need to have a branch or a physical infrastructure in 30 kilometers. And finally, allowing more players in this space. So we have seen for 7-8 years that the existing set of players have not really delivered. Is there a need to look at additional players? It could be through the new banking licenses. Some of the opening up has happened, but maybe the MNOs getting more opportunities. The current way of delivery where they have worked as BCs of banks has not really worked. So is there an opportunity to open up and see, maybe on a pilot basis where some of the conversations are already on, to see if they can deliver as independent entities? And finally, requiring the CSPs to have their own account so that huge amount of cash does not get transported. At least the money can move into the CSP's account digitally, and it's only thereafter that they need to handle cash. And this needs to be, some of this needs to be taken up at a policy level, including a minimum guarantee for CSPs, so that at least for a certain period their survival and their viability is ensured, and the BC companies are not becoming profitable at the cost of the last mile agents.